Hey, tax pros. We're going to be talking about guaranteed payments and the mechanics of how they flow through the forms on a 1065 partnership return. So to get started here, we've got a test return set up. Effectively, the return is blank. There's no trial balance information in. We do have two partners that are 50-50, and so let's jump in. Guaranteed payment comes off of the trial balance, and that gets reported here on line 10 on schedule or on 1065 page 1. And in our sample here, we're going to use $4,000 for this guaranteed payment. And if we happen to have a real estate return rather than just regular trader business, this would be on 8825 instead of 1065 page 1. But so here we go through and we have a book loss of $4,000 for that guaranteed payment. Next, let's flip over to page 4 of Schedule K. And here we have the $4,000 ordinary loss. And then the guaranteed payment is going to show up on line 4. And in our sample here, this is for services. And we got a total amount there. And then guaranteed payments are taxable compensation to partners in lieu of receiving a W-2. So this is going to be reported here also on 14A. This is for self-employment income because this is going to be subject to self-employment tax. And next, we're going to roll down to page 5. And here is the GAAP capital, and that's $4,000 loss flowing through to the ending capital. And here's our $4,000 loss for book purposes. And then the guaranteed payment is also an M1 adjustment. This is a permanent adjustment that adds back and effectively brings income back up to 0. And then here for our M2 for the tax capital, we're starting at 0, and we're actually going to reverse this out and end up with a negative $4,000 tax capital. And the reason being is that even though that didn't affect taxable income, this it was cash that left the partnership, so that reduces tax capital. And before we head over to the K1s, let's take another revisit back on the Schedule K. And here we got our negative 4,000 ordinary income, $4,000 guaranteed payment, and $4,000 self-employment income. And in our example here, partner 1 gets the allocation for the guaranteed payment. So you're going to see 50%, here's 50% partner. He gets half of the loss, but he gets the whole payment and then the whole self-employment amount. And then here for partner 2, here's half of the loss, and then there's no guaranteed payment and there's no self-employment. And then quickly here, we'll look at the capital for the partners. Here, this is the current year income that's derived from the negative $2,000 loss plus the 4,000. That brings us up to, or sorry, current year increase. And then the $4,000 decrease from the M2 that gets applied fully to partner number 1. So that brings your ending capital account down to negative 2,000. And then for partner number 2, we just have the negative 2,000 from the 50% of the loss. And then lastly, let's just take a look at our basis worksheets. We're starting out at 0, $2,000 loss. And since our basis does not go down below 0, we just cap that out at 0. And that is the same for partner number 2. Again, that gets capped at 0. So the guaranteed payment doesn't actually flow to here because that's taxable income. So that's the gist of it. Hope you enjoyed this and stick around and watch for the next one. Thanks.